Welcome to the Oxen Group Nightly. I'm your host David Ristow, and this is our now fourth installment of the Oxen Group Nightly, and we're very excited once again to be with you tonight. Market had another great day, and things just continue to go well. Today we're going to cover the market wrap up for the day. We're also going to look at our entry into our new position in Wyndham, a lodging company. We're going to look at our exit on Ralph Lauren that we got for a 6.4% gain. We're also going to take a look at an update on one of our positions that we've been holding for quite some time now in Roos Hospitality. We'll give a quick rundown of our other current positions. We're also going to give a look over at some of our long-term ratings updates that we had for the day. We had a 25% gain on big lots that we got out of today, and we also reiterated a buy on our position in Baidu, and we're going to talk about both those, and we'll finish up with tomorrow's forecast. So today was a great day in the market. Started out strong, rose throughout most of the day. Had a little bit of a taper off and finished strong into the close. The market moved up on somewhat limited news overall, but one of the main stories that helped out today was actually what most people would have, maybe a month ago thought was a weak story, was China's decision to raise interest rates to curb inflation, and that really helped the markets move up. We'll get into that a little bit in a second here. We also saw, besides that, limited news and earnings this morning were nothing special from Sara Lee and some of the other big names, and so market moving up on that is a really strong, really bullish sign. And we also got good numbers in after our earnings from a number of companies, and even some of the weak results that we saw from other companies. We saw buying up on those too, so it's setting up for yet another great day in the market tomorrow, and things are just looking very good. Let's get into China though. China really ruled the day. Today, the country raised its interest rates 0.25%, and this is the second time they've done that in a month to help stop inflation. The first time it happened, it was viewed somewhat negatively, but as more reports have come out of China, inflation has gotten so high there, and the economy is so high that basically prices have gotten too high for consumers to even really spend money on a lot of things other than necessities and basic everyday things that they need, food and toiletries and things like that. And so the rate hike is actually hopefully going to help curb some of this inflation, bring down growth a little bit, but at the same time, the American economy and American companies are really heavily invested into China, and we need the Chinese population to be able to buy our goods, to be able to produce efficiently, to be able to be a market where we can sell our goods, and a lot of companies are heavily connected to how China does. So we need them to be able to do well. We need their spending to be able to be at a very high amount that's not just rising simply because of higher prices, but it's rising because they're becoming more wealthy, and that's the difference there. You might see consumer spending rising in China, but personal wealth is not getting any better, and so the discrepancy between those two is not good. And so this was actually viewed as positive today, whereas it was not in the past, and some of that might actually just be because the market wanted to rally today. We look at a new story in a positive light. Today, if you can see in the morning, what we had here was the market really rising right off the bat. A little bit of, just not sure what we're going to do today, but after that was solved, we saw the market just rise straight up throughout the morning, hitting a nice stride, moving up about 50 points off yesterday's close. After lunchtime, during this lunchtime, we see the lunchtime lull, and once the market really returned its volume, this dip right here created just another buying opportunity. We see the market just moving up throughout the rest of the day. A little dip here, bought back up again, and this is a trend that we've been talking about over the last few days, and it continues to showcase the fact that this market is just extremely bullish right now. Every dip is a buying opportunity. Even the smallest, slightest, 15-point drop in the Dow is creating a great buying opportunity. Another positive point was we had monthly sales come out from McDonald's that were well above expectations. I think they were about 2.6% increase for comparable same store sales for month over month from January. Um, and after hours, we saw a mixed earnings, which is setting up for tomorrow, but mostly was positive. We had Buffalo Wild Wings come out with pretty good earnings with a 0.55 EPS versus 0.52 estimates. They backed their guidance for the full year, and they saw 3.8% increase in same store sales. We also had Disney. They had profit up 54% year over year with an EPS of 0.68 versus 0.56 expectations. They said that park attendance was really key to that gain in ad revenue from some of their ABC and ESPN television stations. We also saw Beazer Homes come out with some weak earnings. The company was at negative 0.66 versus negative 0.50 expectations. They saw new home orders drop 24%, and really just not a good report for them. Another home builder that just has nothing good to say, basically. And out of all the sectors, that really just has not been able to come back yet, it's still new homes. And they're hoping the spring selling season will be big. I'm not really that bullish on it yet until we see some better numbers. Avon Products also gave a pretty weak report after hours. The company, which gets 80% of its revenue from out of the country, said they saw supply issues in Brazil and weak spending in Russia that caused them to miss estimates as they came in at 0.59 versus 0.66 earnings per share. Specifically for us, Take-Two Interactive is a company that we have a long-term holding in, and the company had very solid earnings, beat expectations heavily, 0.45 versus 0.32 expectations, and raised guidance. And very, very excited about this year. Been profitable for a couple quarters now without a Grand Theft Auto release, and all good things for Take-Two Interactive. Today we also got into Wyndham. WYN is the ticker. This is a lodging company known for mostly their resorts and some of their suites. And we entered today at 30.42. I like the stock moving up today. They have earnings tomorrow morning, and we're holding 30% of our position left into earnings. It was a day trade with the possibility of an overnight hold into earnings, and we got out during the day at 30.85 for a small 1.35% gain. Wasn't great, but the stock looked very nice moving into the day, and just couldn't get the final breakout over the hump around that 30.80 to 30.90 range where we thought it might be able to break out of. Earnings tomorrow are supposed to be better than year-over-year EPS growth, and we've seen positives coming in from Lowe's yesterday. The commercial property and hotel holdings company, they said they saw good things from their hotel sector. We saw good things from Travel Zoo last week and the week before. Royal Caribbean, they all signaled that the consumer is back to traveling. They're spending more money. We saw Disney tonight with the 2%, park rise in attendance. People are, willing to do some of that discretionary spending. Businesses are, doing more deals, sending people to more places. Flights are on the rise. Capacity is increasing, and so that means hotels are increasing. And before earnings have even been released, which is tomorrow morning, the stock actually rose 3.5% in after hours, and so things should be very positive for them tomorrow. And we still have a 30% position in there, so we're excited that we'll be able to add to our gains tomorrow. Here's the chart on Wyndham, and here's what we were seeing, just to help you sort of understand how we approached this stock. What we really liked about it is we saw this breakout happening, and today we saw that yesterday it broke through that moving average at 29.88. So if we got in today, we thought that upper limit, where is it going to be? And there was a Bollinger Band that was here at 30.90, I think it was. And so we thought if it can break that, it could definitely go to 31.50 at least today. With the RSI only at 62, it has an upper limit of probably usually around 70 before things really start to sell off. So we were hoping for that breakout. It didn't happen quite the way we wanted. We were still able to get out for a nice gain on the day, and we're holding into earnings, which should hopefully give us some more tomorrow. We also had a great day from Ralph Lauren. We got out for an exit on an average gain of 6.4%. We had a really nice entry down here at 105.75 is here where we got in a few days ago. And we just like the stock. It was down in the dumps on last week, and the stock was looking for really positive earnings. Things were looking very bullish for the company moving into this earnings season. Consumer spending was up. We had seen some retail hints at some really good earnings. Luxury spending is up. We had great earnings from Coach come out, which is not the same exact company, but a similar style company. And once we were able to see it, we sold our first part of the position here at the breakout here at 110. And then we sold again today at 115 as the stock broke over 115 at 115.02 for an average exit at 112.52. And so that was a great gain for us. It was a nice midterm trade. We were able to get 6.4% on that position. One of the stocks we've been holding for quite some time is Ruth's Hospitality Group. Here you see Ruth. We bought the stock right here back towards the end of January, and the reason we really liked this stock was because the company had reported right here you see this gap up, that they had really done very well in the quarter four. The company had seen same-store sales rise around 15%, and they were just, they were killing it. Private dining was up, and things were just looking very good. And once the stock hit this area, it sold off all the way down to this moving average right here. When we hit this moving average, this is where we bought, right around 501 is our average entry. And the stock could not maintain it, broke through there, and then settled back at another really nice support level it has in the mid 460s. And I knew it wasn't going to be able to break below that level. We haven't seen it break below that level for quite some time, and especially with those numbers coming out, did not seem like it was going to be able to break out of that. And so we've held on to it for quite some time, and we believe that this stock is definitely going to be able to break above 5 and go higher. And this is still a great time to get into this stock. If it can go to 520, 530 before earnings, which are on February 18th, you're going to make a really nice gain on this stock. And we're still holding. We're still expecting good things. You see that the fast stochastics are separating. Got lots of room to grow. RSI is only at 48. It's got tons of room to grow. This is a great place to get into Ruth's Hospitality with their, already reporting how they're going to do in quarter four. That number is not priced into it at all, but those numbers are already known, and it's just, it's like stealing baby from candy. Get into it. Our other current positions we have right now, we have an Activision Blizzard position. We're going to have to close out tomorrow before earnings, which are tomorrow evening. We're up 2.5% currently on that position. We'll hopefully look to get out between 3 to 5% tomorrow. Expedia, excuse me, EXPE is the ticker, up 2.5% after our first day. We're definitely looking for a major breakout to the upside with this one, with lots of travel associated companies slated to report earnings, and the company expected to hit EPS of 0.36, beating year-over-year estimates of 0.30. Infinera is one of our long positions. We went over that yesterday. It slowed its charge and took, I think, a little bit off the table today, about a nickel, but we're still looking for it to continue to bounce back. That little bit of a pullback had to happen after the stock went from 720 to 850, and the pullback was very minor, and we think it's just, a healthy pullback, and the stock's going to move higher from here. We did get stopped out of a GFIG short sale for a 2% loss today, but after the Ralph Lauren gains, ATVI gains, Expedia gains, Wyndham gains, that was minimal. Just a quick update on our long-term portfolio. We sold half of our long-term position in Big Lots today for a 25% gain. We got into the stock around the 30.40 level, and we were able to sell today at the 38.40 level. And this was a great trade for us. Investment for us. We got into the stock back in the end of December, and we've held since then. And today the company announced that they are looking to sell. They have a couple offers on the table from some buyout firms, and they think that they might go for it. And this would really take the stock. There's no reason to expect it won't continue. Well, that's all for today. Visit us at www.theoxengroup.com. Email us at contact@theoxengroup.com. Call us at 1-800-709-1160 and be a part of 70% plus accuracy now.